Hey folks, welcome back to another Alphabet Challenge update. And for the options last week on Friday, I saw an opportunity to sell a 97.96 put spread, so I made about $30 from that, which combined with my trades on Monday, that gave me $176 in premiums. The stock closed the week a bit higher at 99.73, $1.35 higher than the previous week, and because I still have 300 shares, it means overall I got a boost of $717. So this puts my annualized ROI at 39%. So the 95 put here from last week, it expired out of the money, and the 102, 103, 104 calls, all of these expired out of the money as well. So I'm going to get rid of this because Alphabet closed at around 99 here last week. Because on Thursday, Alphabet comes out with earnings, the implied volatility is very high this week at 66%, which is about double what it's usually at. You can see last week the implied volatility was 33%. And as an option seller, what I'm doing, this is a positive thing. Okay, so in terms of where I want to put my calls and puts, well, I have to consider both the bull and the bear cases for when earnings come out. So for the bearish argument, you could say earnings could be pretty bad, or they can have negative guidance going forward. So we know that Alphabet's already been going down in this bear market channel, but there is a sign that it might have bottomed. If I draw a line between the lowest point of the stock, which was back in November of last year, and connect it with the low point of the most recent low swing, you can see this is sort of on an upward incline, which means the bears tried to push the stock back down to the previous lows, but they failed. And so the stock bounced and is now at a higher level. So if earnings do come up pretty bad, the stock might drop down again, but I think it's going to find some kind of support along this blue line here, because based on the trend, it seems like a lot of buyers would come in here and bid up the stock at that point. Now, it could bounce around this support level, sort of like it did previously in late December, early January, and then ultimately fall down to retest the previous lowest low or even make a new low, because this bear market channel suggests that Alphabet can still fall quite a lot if there's really bad news. However, in the short term, which is this Friday, that's what this dotted blue line represents, it's not likely that Alphabet is going to fall below here because it's such a short time. When earnings come out on Thursday, there's really only one day for the stock to react, and dropping from around today's price 97 down to about 87 is already a pretty big drop. So I'm comfortable buying the stock if it goes to 87 around this level by the end of this week. Now, in terms of if there's a bullish case and the stock moves up and above this red line, where can it go to? Well, zooming out a little bit, we can see there is this previous support line here, which it broke through, and then that basically acted as resistance. So that's around 105. So that's going to be the basis of where I'm going to put my short puts and short calls this week. I have 300 shares, so I could sell 3 covered calls. So let's take a look at the option chain expiring February 3rd, and let's do the put first. Okay, so at 87, I can make $21, but that's not a lot of premiums. So maybe I'm looking at a higher strike here. My current average cost is $99, so I would even be okay buying it at maybe $91. Because if the 91 gets exercised, for example, the stock goes to 90 or 89 by the end of the week, then I can lower my average cost down from 99 to 97. So for my put options, I think this is a pretty good strategy. I'll have 2 short puts, one at $91 and one at 87. And overall, I can make about $85 after commission. We'll see. Now for my call options, that's going to get more interesting because you can see at 105 here, which is roughly where I think is the highest the stock can reasonably reach by the end of this week before it hits some kind of hard resistance up there. So maybe what I'll do is sell 3 calls, and I'll sort of sell them in steps. So maybe I'll go like 102, 104, 106. And maybe I'll even sell a 112. So that's 4 calls. 3 of them are covered. This 112 will not be, because if the stock does rise all the way up to 112, which is up here, I think that's an opportunity to short.
Order filled.
Okay, so those 2 put options just got filled. Yeah, Alphabet went from down here like $87. If it goes up to 112 by the end of this week, that is definitely an overextension, and I would expect the stock to go down afterwards. Even if I draw a trend, that captures the price action over the last few weeks, which is this really aggressive upward move. As you can see down here, we have 1, 2, 3, 4 touches. Even if this continues, the highest you would expect the stock to go up to is 107.5, right? So if it goes to like 112, then it would break out of this already really steep channel, which is not very likely. And yeah, I think this is pretty good for call options here. I'm going to set this price to 259 for now, and I'll submit that. I'll drop it down to 257, which is the mid price. The more options I have at different strike prices in one strategy, the harder it is to get filled. Okay, so it looks like Alphabet is continuing to fall lower for the day, and now the price of these calls collectively has fallen down to 248.
Order filled.
Okay, there we go. So it filled at 249, and what I have now are 2 option strategies for my Google trade for this week so far. All right, so it is now Tuesday, and looking at previous weeks where earnings came out, I usually sold some kind of spread, like a put spread or a call spread. So I think I will do that again this week. The stock is at $97 right now. The lowest that Alphabet dropped to in the last time it had a swing low was around $84. So I think around there is where I want to sell a put spread. It won't be a lot of premiums, but I should be able to get something. I can sell the $84 put for 9 or 10 cents and buy the 82 put maybe. So that's a difference of about 4 cents, and I'll put on 10 quantities for that. Okay, so 1 out of 9 has filled so far for that put spread. In the meantime, I'm going to put on a call spread as well. It looks like 117, 118 is that 3 standard deviation threshold. So I will pick somewhere around here to sell my call options. Maybe I will sell the 115 call and buy the 118 call. That should give me about 3 cents, and I'll put in 8 trades for that. So 115 would be all the way up here, which means if I go to the weekly chart, there would have to be a huge candle, something like this, in order for that call spread to lose money. As you can see, that would be a pretty significant move. This measures about 18% from where the stock is currently at, basically from the start of the week. And Alphabet does not have 18% moves very often. Okay, I'm going to lower these by 1 cent each, so the put spread down to 3 cents.
Order filled.
And the call spread down to 2 cents.
Order filled.
Oh, I didn't realize the commission was so high for the bear call spread. Okay, so that was actually pointless because I made $16, but I paid $16.47 for commission. So there's absolutely no use of doing that. But if I close this now, I'll probably have to pay another $16, so I might as well just leave it. In any case, I have 4 Alphabet options this week that hopefully are all going to expire out of the money. So let's see what happens after earnings, and I'll give you guys another update next week. Thanks a lot for watching, and I'll talk to you in the next one.